Welcome back to DukascopyTv. I'm Monica Gibson, and joining me down the line to discuss the economic slowdown in China and the consequences it has on countries who have become too reliant on its economy is Shane Brett, founder of Global Perspectives. So Shane, what is your take on China's current and future economic performance?
China's obviously had a very large investment boom, which has really been financed by the exports that it has sent around to the rest of the world. At the moment, it's about 50% of its GDP it's spending on investment, and obviously that's not sustainable. The main problem China has is where it's going to get its future growth from, and its export markets, obviously in the Western developed world, have obviously slowed down considerably. So China is facing a slowdown in its export markets, and really is obviously unsure of how it's going to generate that future demand, as it looks unlikely to repeat its major stimulus from 2008.
What impact is it having on the rest of the world?
Well, I suppose up until now, China was the good news story that was the engine that was meant to pull the rest of the world's economy back to growth again. And obviously on some particular markets, like Australia being a prime example, a country like Australia is very heavily dependent, and also Japan to an extent as well, on growth in China to fuel its own economy, and obviously to provide it with resources.
So if we look at Australia, some experts are saying that the Aussie dollar is a very vulnerable currency. In your opinion, what are the main reasons for this?
I would think the Australian dollar is probably the most overvalued major currency in the world. So there's two main reasons. Australia has had two bubbles over the last couple of decades. One is obviously feeding its commodities to China, so a huge investment boom obviously taking place in iron ore, coal, liquefied natural gas in the future, and even uranium as well. So that's on one side. So structurally, as China slows down, because obviously it can't keep growing at 10% forever, exponentially, that's just not possible. So that will affect Australia. But also significantly, Australia has probably the most overvalued property market in the developed world. And really, the Australian economy kind of resembles the UK probably just pre the 2007 credit crunch, in that you've got a lot of household debt and overvalued housing markets. And you've got really a lot of banks who are dependent on short-term finance, which they are in Australia.
Australia's economy failed to meet expectations. However, it still grew 0.6% in the second quarter from the prior 3 months. How severe is this downturn? Is Australia just being overcautious?
I think it's going to, by Australian standards, I think it's going to get worse. So if you can imagine, Australia hasn't had a recession since 1991, so they were the only major global economy to escape a recession in the last 4 or 5 years. So really, for them, it's going to feel like a substantially weaker economic climate. But I mean, the main issue will be around the housing market. That's where the middle class in Australia are really going to feel it. The only benefit may be that obviously the Reserve Bank in Australia is reducing interest rates probably reasonably rapidly. On one side, that should ease consumers' mortgage payments, but on the other side, it may mean a flight as people sell Australian bonds, and that could leave the currency and the country in quite a precarious situation for its funding.
Many believe Australia is yet to see the full impact on export values from the sharp fall in coal and iron ore prices. Just how hard do you think this will hit their economy?
I think it will hit it hard. I'm very positive about the long-term Australian economy. I think it has good demographics. I think long-term the world needs its commodities, absolutely. But in the short term, obviously, and similarly to other economies that have had large investment booms, like Ireland is a good example, where you've had a lot of over-investments. They built out their commodity sector hugely, and that was obviously to satisfy pretty rampant Chinese demand. This is now going through a slowdown in China, so I think there's going to be a period between maybe 5 and 10 years, depending on what happens in China, where Australia will have a huge overhang. And it's very, very difficult to rebalance an economy like that, because all of the investment in things like railroads and heavy machinery, it's hard to put that back into a service economy, if it's sitting out in Western Australia. So it can be quite a demanding task for an economy, and it will probably rebalance quite slowly, of which hopefully for Australia a weakening currency will help that process for exports.
When it does hit, experts are saying the economy will slow, the central bank will cut rates and the Australian dollar will fall. Do you agree with this?
Yeah, so I see two things. I see, number one, the currency significantly reducing in value, and also interest rates falling. in Australia. So I think interest rates in Australia are around 3.5%, which is obviously low, probably half of what it was in Australia maybe a number of years ago, but it's still much higher than in the other wealthy countries. So that's going to come down, and also the currency. There is no real reason for Australia to have as strong a currency as it has it at the moment. I mean, I see as today the exchange rate with the US dollar is about 104, and really. During the commodity boom, that might have made sense. But now that has come into a pause as China and the BRIC countries slow down along with the developed world, there is no real reason for Australia to have that strong currency anymore. So I think we're going to see a reasonably rapid depreciation in the value of the Australian dollar. What could happen if there is a banking crisis, and obviously hopefully in Europe that won't happen, but if there is some sort of credit events where we have a repeat of a credit crunch type scenario, well, I think investors will pull their funds from the Australian dollar, and that will definitely leave the Australian banks volatile, just like in Europe and the US 4 years ago. So in that scenario, I would see the Reserve Bank of Australia having to step in quite rapidly and prop up its banking system, because it's made up of four main banks, and it's essentially an oligarch situation, and each of those are systemic. So they would have to move quickly to backstop their banking system. Very similar to what Ireland had to do, and Spain and the UK as well.
Shane, thank you so much for sharing your insights today. Sadly, that's all we have time for at the moment, but click back to Dukascopy for all the latest updates. Bye for now.